This video will teach beginners about stops, entry, spread, and limit orders in relation to Forex and indices. Following on from my last video, which explained support and resistance and showed you how to draw it, I received a message from a subscriber who said they didn't understand what I meant when I was talking about stops. So this video is in response to that. You will come across stops, entry, spread, and limit orders in almost all of your trades. Okay, let's get started. The best way to think of a stop is as a type of safety net. You can set stops before you open a position and also when you have a position open. What a stop does is automatically close your position if the market moves against you the number of pips that you set your stop. I would always recommend setting a stop. Let's say that you don't have a stop set and the market turns against you. The market can move very quickly in times of high volatility, oftentimes faster than you can react to it. This could result in a nasty losing position. In fact, without a stop, you won't be closed out by your broker until your account is completely wiped out. Another thing to note is that you can move your stop at any time. This means that once your position moves into profit by, say, 15 pips, you could set your stop to break even, thereby removing the chance of a losing trade. I should also point out that in times of excessive volatility, you may suffer what is known as slippage. This means you do not get closed out at exactly the position you set your stop. This tends to happen during large news events, like interest rate decisions, so be very wary of this if you intend to trade the news. Okay, let's move on to entry. You can enter the market in two different ways. You can either enter at market, meaning that your position will open straight away at the best price available, or you can set a buy or sell order to open once the market reaches a certain price level. If the market doesn't reach this level, then your position will not open. The spread. This is how your broker makes money. They are a business and unfortunately they do charge us for their services. The spread varies between different markets and also different brokers. As soon as you open your position, the spread is taken into account. This means you always open in negative by whatever the spread amount is. So, on a 1 point spread, you open at negative 1 pip and the market would need to move 1 pip in your favour before you reached break even. And finally, we have a limit order. A limit order is simply a predetermined take profit point. So if I set my limit at 10 pips, the market would automatically close me out once I reached a 10 pip profit. Now, let's have a look at this all in action. Here I'm using Pro Real Time and my broker is IG. You can see the buttons for sell order at market and also buy order at market. Using these buttons would open a position at the current market price plus or minus the spread. Here we can see the buttons to open a sell or buy order at a specific level that you determine. For example, we could set a sell order to open at 11,160. This would only open if the market then reached 11,160. We could also set a buy order at 11,130. Again, this would only open if the market reached our set price. Now, let's open a sell position at the market being at 11,154 for ease. Over here, we can see the difference between the bid and the ask. This is the spread. So on this market, it is 1.5 pips. With the spread taken into account, our entry is now 11,152.5. We set our stop to 10 points. This sets at 11,162.5. We will now be closed out automatically for a 10 pip loss if the market touches this zone before our limit is reached, or we close the position manually. We also set our limit to 10 pips. So, if the market reaches 11,142.5, we will be closed out for a 10 pip profit automatically. And that is how to understand stops, entry, the spread, and also limit orders. I hope you enjoyed this video. If you did, please subscribe to Decisive Trading and also like the video. I intend to put together a full series of videos, exactly what I wish had been available to me when I started out in trading, leading you from absolute beginner to trading mastery. I'm James Orr, and thanks for watching.